Hi, my name is Khan. In this chapter, I'm going to teach you about what is order flow and how you can trade it and how we can identify where is our high probability POI and which is our inducement and engineering liquidity. So first of all, before the marking your POI, you have to mark your correct structure. For example, if your structure is a bearish, then how we can identify where is your POI and when we can take risk for the buy and sell. In the diagram 1, you can see when market break the structure. Generally, after break the structure, we sell after taking out the inducement at least or taking out the engineering liquidity, then we can sell. These two scenarios is a possible for the sell, which is absolutely correct, and same thing will be applied here. In this case, this is our inducement. Okay, if market go higher after taking out the inducement, and then we can sell. But how we can identify that this inducement will be work or not, and where is our high probability? Sometime what happen here, market push higher, okay, taking out this inducement and then go more higher and did not tap your extreme one, but market push downside like this. Okay, so in this case, how we can identify them? First of all, you have to identify where is your order flow, and second thing is your order block. Order block came from the order flow, so order flow is a more important compared to the order. So in this case, if you mark your order flow, so first order flow is here. This is our last buying before this drop, so this entire zone is called our order flow. If you mark another one, so this one is our next order block is here, so this one is our next order flow, which one is here. And in this case, where is our high probability for the sell? When market taken out the inducement, and if market create order block is here above the inducement, so there is very low chances that market push higher, taking out the inducement and then go downside. Why? Because market already mitigate this order flow is here, then very low chances here to market taking out the inducement before this drop. So where is the next high probability? This one is here. Why? Because this one is our unmitigated order flow, so market must be taken out this high, which one is here. This one is called engineering liquidity, because this one is our extreme lower high in terms of the internal structure. Once market collect this engineering liquidity, then we can sell is here. So market must be taken out the engineering liquidity and mitigate this order flow. If market mitigate this order flow, then you have a very highly chances then market will be go as per your direction into the downside, and order block is not necessary if market mitigate this order flow. If market mitigate this order block, which is very good, and this is our additional confirmation. But order flow is important compared to the order block, because order block came from the order flow. If your order flow is a type here, then no need to mitigate your order block. So in this case, we can sell after taking out the engineering liquidity like this, right? So this is our high probability zone when we can take entry for the sell into lower time frame. You don't need to sell here into directly here, because if you are selling here, for example here, and then your stop loss is here, which is a very higher compared to, so you have to wait for the lower time frame entry in 1 minute here, and then we can sell here, and target will be here, which is our 15-minute measure low, right? So this type of entry is applicable here. In the diagram 2, you can see market again break the structure. In this case, where is our high probability POI? So on the top of the structure, this order flow is here, which is already mitigated, you can see, but this order block is unmitigated, but order flow is mitigated here. So where is our next high probability POI before this sell? So first thing, you have to mark your inducement. So where is our inducement? This one, internal high is our inducement, and same thing happen here. This one, in the first diagram, inducement was here, right? So after taking out the inducement, where is our unmitigated order flow? First thing, you have to mark your order flow, which one is here. So after taking out the inducement, you have very chances, after taking out the inducement, you have a very highly chances market will be tap here, at least this one, and then market tap here and push downside. And another type of entry is applicable here. If market go higher, just sweep this high, then we can sell, apply entry type 3, which is another scenario. But in terms of the order flow, you can wait for the mitigate this order flow, then we can sell like this. Okay, and why we can't? You don't need to mitigate this extreme order block. Even this one is our engineering liquidity, but this is not high probability compared to this one because this one is our unmitigated order flow. That's why this is more high probability compared to the extreme, and I hope you understand what I'm trying to explain here. First thing is your structure. First mark your correct structure, then identify where is our unmitigated order flow, because order flow is a more important compared to the order block, because order block came from the order flow. Order block is a refined version of the order flow. Okay, so we can sell after taking out the inducement, after taking out the engineering liquidity, but you have to say that where is our unmitigated order flow, right? It's all about probability. Compared to the order block, order flow is high probability because this one is our larger range. Compared to the order block, most of the time order flow will be tapped. Okay, that's why order flow is a more important compared to the order block. Now let me show you exactly on chart, then you can understand more better and you can identify where is our high probability POI and how you can trade it. Now you can see here market structure was bearish and now market structure shift bearish to bullish, and this is our first change of character. And after change of character, generally we are looking for the taking out the inducement, then we can buy because market momentum shift bearish to bullish. So in this case, when we can buy, first thing you have to mark your order flow. So where is our order flow? In this case, this one is our last selling move before this buy, which one is here, right? But we can't buy here. Why? Because there is no inducement. So this is become our new inducement and we can buy below it, but below it there is no other order flow. Okay, so in this case, after taking out the inducement, which one is here, we can buy here. Okay, and after taking out this low and close above it, and we can buy into 1 minute structure. In the next attempt, what happened here? Market break the structure is here. After break the structure, generally we are looking for the buy after taking out the inducement. So first of all, you have to mark your correct order flow. So in this case, where is our order flow? On the extreme one, this one is our last selling move before the buy, which one is here, right? So this one is our first order flow on the extreme, and this one is our high probability because this one on the extreme. And the second one, where is our next order flow? Next order flow below the inducement. And where is our inducement? In this case, this become our new inducement. Why? I already mentioned that this one is not broke this low and this is not a valid pullback. Okay, so this become our minor structure low and this is our inducement, and we can buy below it if anything below it. So this one is a last selling move, which one is here before this buy, and you can see what happened here. Market taken out the inducement and we can buy on this candlestick, which one is here, and this one is our area of interest when we can take risk in the 1 minute chart and then we can buy. And in this case, you can see when market create 2 POI, I already mentioned that every time when market create 2 POI, the extreme one is high probability compared to the first one. First one is a decisional and extreme one is high probability. Then okay, so market taken out the inducement and tap on this order block and then we can buy. And if market tap on the next order flow is here in the future, and then we can also buy. Let's see what happened next here. Market did not tap here, missed by few pips, you can see. And if market tap here, we can buy for the next move. Okay, after break the structure, where is our inducement? First thing you have to mark your inducement. So this low is our inducement, which one is here, right? So this one is our inducement, and now you have to mark your correct order flow. So where is our order flow? Order flow is here, last selling move before the buy is here, and market tap here, give a reaction, and you have to identify, you have to verify where is your order block when we can take risk for the buy and sell. So this selling candle before this buy, this one is our order block, and you can buy into 1 minute chart for the what happened here. Market failed this order flow, failed this structure, okay, and market shift bullish to bearish and become this is change of character. But this one is our unmitigated zone, and it doesn't mean that market tap here and market go higher. It means when market tap on unmitigated order flow, they will give you short-term pullback to the upside or downside as per the structure. Okay, so what happened here? Market tap on this unmitigated order flow, and where is our order block in this order flow? You have to identify this selling candle before this buy is here, and this is our order block. And when market tap here and you can switch into 1 minute chart, then you can buy. Okay, so it doesn't mean the 1 minute, you can use lower time frame as per your higher time frame. If you are using 4 hour, then you can use 15 minutes for the entry. Okay, and if you are using 1 hour for the higher time frame, then you can use 5 minutes for the entry. And if you are using 15 minutes, then you can use 1 minute. So market tap here, and this is our high probability PY, and you can buy here for the short term. Why? Because market structure shift bullish to bearish, and now we are looking for the sell. So where is our next sell bearish order flow? In this case, market break the structure is here. First thing, you have to mark your inducement, and second thing, mark your engineering liquidity. So first one is our inducement. Which one is here? Why? Because market shift bullish to bearish, and this one is our inducement. After this inducement, when we can sell, so you have to mark your order flow. So first order flow is here, the last buying move before the stop is here, and we can take risk into lower time frame is here. And this one is our inducement entry. Inducement is our 50% chances. And the next one is our extreme. And where is our extreme last buying move before the stop is here, like this. Okay, so this one is our last buying move before the stop, and extreme always high probability compared to the inducement. And why I'm marking this one? Because this bearish candle broke the previous candle high and give a little bit pullback, and then market go higher. So this one is our refined, you can say refined also. And this one is our various order flow. Even entire order flow is here. This one is a very larger. Okay, so we use for the refined, and we can use also this one. So in this case, you have to identify where is our order block, because this is entire zone is our order flow. So first thing, you can see this one is our unmitigated order block is here, right? And this one is our order block, first one. And the next one, where is our next order flow? Where is our next order block? Which one? On the extreme one is here, right? And this week also work. And if market trading below this high, that means market momentum is still bearish. If market failed this order block, it doesn't mean that market momentum change. No, market momentum is still bearish until taken out this high. If market break the structure, and then market can be changed. So now let's see what happened next here. Market tap on the extreme one, which is one in here. Okay, and after tapping this extreme, market trying to push downside, and we can sell into lower time frame. And here we can see sometime you can see clear order block, sometime you can see big. So this is our next PY. First one is here. Okay, and this one also we can use, and this one is also in this type of the structure. We can use multiple PY when we can take risk for the buy and sell. And why I'm choosing this one? Because this is our entire order flow, and between this order flow, 2 PY is here into lower time frame. So we can choose also first one is also here, and the extreme one also here, because we don't know exactly which order block will be tapped, because main thing is your order flow. If your order flow tap, that means is enough. Okay, so what happened here next? Let's see. Market push downside. Okay, if you are selling here into lower time frame, then we can target the low is here, right? So after taking out the previous low, what happened here? Market just sweep the low. When market sweep the any major high or low, we know very well that we apply entry type 3 when we can buy and sell for the short term. If market momentum in a pro trend, then we can buy for the longer term. But if market sweep against the trend, then we can buy at least taken out the inducement. Okay, so what happened here? Market just sweep the liquidity, previous low sweep here, and we can buy till the inducement, because when market taken out the low, we can buy, and we can sell after taking out the inducement, after taking out the engineering liquidity. So you have to mark first one is the order flow. So start from the top of the structure is here. This one is our last buying move before the stop, which one is here. So this one is our last buying move before the stop, so we can buy here. And the next attempt, what happened here? Market break this minor structure is here. This is our internal structure, and this one is our last buying move is here. before the stop. So you can see market mitigate this one and also mitigate this one. So both order block is mitigate here. So where is our next order flow? I'm sorry, both are order flow, not order block. Okay. So what happened here in the next attempt? This one is our likely this one. Okay. So this one is our bearish order flow, and this one gives you buying momentum before the stop. What happened here? Last buying before the stop, and you can see another one is here, market taking out the liquidity, right? So after taking out the liquidity, we can sell on the order block and order flow. You don't need to wait for the inducement. Okay, so what happened here? Market taking out the inducement, market taking out the liquidity, we can sell in this order flow between this range, right? So market going higher high and upside, you have to identify where is your order block between this order flow, right? So first thing is here, the identify where is our refined order block. So this one is our refined order block is here possibly. Okay, and the next one maybe above it. So these 3-4 order block is available here for the sell like this. Okay, possibly is here. So we can sell after mitigate this order flow is here. Why? Because market taken out the inducement, because market taken out the liquidity, something like this. Okay, so in this case we can use this order flow for the PY into lower time frame, we can sell here. So this is our possible scenario. In the next attempt, what happened here? Market break the structure is a completely here. Why? Market close below it. And the first attempt, this was not a successful break of structure, just sweep the liquidity, give a pullback and push downside. And when market break the structure, you have to identify where is our order flow. You have to identify where is our inducement. Same thing happen here. You can see market break the structure is here, market taken out this inducement. After taking out the inducement, where is our order flow? First thing you have to mark this one, our first order flow is here, and the next order flow, where is our next order flow? This one. Why this one? This entire zone is our order flow, and because this is our last buying move before the stop, so this entire zone is our bearish order flow, and we can sell if market tap on this order flow, and you can mark something like this, and you can also refine into order block, which one is here, right? And you don't need to mitigate this order block is here and here. You can sell when market tap on your order flow. Order flow is enough, and but you need a multiple confirmation is here, like if market tap on the order flow in a 15-minute, then you can wait for the lower time frame confirmation for the sell, because order flow is a necessary, order block is not necessary. And sometime what happen, order block not tap and market push downside or upside, but if market tap on your order block, they will give you additional confirmation before the buy and sell. So what happened here? Market break the structure, taken out the inducement, tap on the first order flow, which one is here, and you can refine into 1 minute and you can sell. And the next attempt, this one is our extreme one, and this one is our engineering liquidity. Okay, so after taking out the engineering liquidity, what happened here? Market just sweep the liquidity. This is our strong indication for the sell. In this example, you can see what happened here. Market tapped this order block, but why this order block is a fail? Because in this case there is no inducement, no engineering liquidity is here. Okay, and this high become our inducement, because below it there is no inducement. After taking out this inducement, we can sell, and this entry become our high probability. And if you ask me why this inducement is necessary here, because market already mitigate this one, okay, taking out this high, and then market push downside, but this is our higher time frame. In a lower time frame structure must be taken out the inducement also. So what happened here? Market taken out this inducement, tap on this order block, and we can sell into 1 minute. Okay, and the next one is here. Below this high, everything is a bearish. Okay, why? Because market momentum is a bearish and every order block is a filled, right? Same thing happen here. Market taken out this engineering liquidity. After taking out this engineering liquidity, what happened here? Market tap this order flow, but we can't sell here. We can sell here if market sweep this high. Market already sweep this high and close below it. You know very well this is our entry type 3. You can switch into 1 minute and then you can sell and target below this low. If you switch back into the 1 minute at the same point, then you can see multiple entry is possible here, and this one is our change of character, which one is here, right? Because this was our sweep, okay, but price must be change of character. So what happened here? market change of character is here, price push downside, and then what happened here, market taken out the inducement is here, and first entry is here, second entry is here. Okay, we can sell here. And the next attempt, what happened here, market tap on this order block which gave you a flip entry type, and then what happened here, market tap on this order block and push downside. And the next attempt, what happened here, again market break the major low is here, and there is no inducement, so we can't sell here. So where is our next entry? You can apply same thing here, you can apply the order flow. So where is our order flow? This one is the last buying move before the stop, which is already unmitigated. In the next attempt, what happened here, this one is our mitigated, but we can't sell here. You have to wait for the taken out the inducement, then we can sell if market close below it. I mean, if market break this low, which one is here, like this. So when we can sell, we can sell if market go higher, taken out this high and tap on this order flow, right? Then we can sell like this in a 1 minute structure. But at this point, how we can deal in this case? So this low broke this new, and this become our new order flow is here. So after taking out the order flow, we can sell. As I mentioned, this become our new order flow, which one is here, so must be taken out this one, and market taken out this order flow and taken out the liquidity, just sweep the liquidity and we can sell. Okay, and same thing happen here in the next attempt, market break this low is here. After break the low, where is our inducement, where is our order flow? So this one is our last buying move before the stop, which one is here, like this. Okay, so this high act like our inducement, tap on this order flow and push downside, right? So you can sell something like this, and this one is also order flow, but we can't sell here. Why? Because we need inducement. So this order flow act like an inducement, and after taking out this high, we can sell here. Same thing apply here. This thing work in every time frame, everywhere. Okay, so you have to pay attention to mitigate at least your order flow, and between the order flow you can find your right POI. First order flow can be your trap. Okay, so wait for the taken out the inducement, then you can sell and the buy. I hope this will help you a lot to understand new thing, that how things actually working here. You can see this one is our last buying move before the stop, which one is here, and this high act like an inducement, and market tap on the extreme one, which one is here. Why? Because every order block is a fill, and this was unmitigated, and this high act like our inducement. After taking out the inducement here, we can also sell, but you have to remember this one is our order flow, so market can be tapped here. So you can first entry sell here, after sweep this high we can sell here into 1 minute, right? So this is our 1 minute chart, and the next entry is here on the extreme one, right? It's all about probability. You have to play in a probability, where is our high probability. There is not 100% sure in anything in the smart money concept. Thank you so much for watching the entire session. I will see you in the next video. Happy trading.